Okay, good morning. You're all very, very welcome this morning. The latest in our webinars with our patrons and partners, FPM. Absolutely delighted that FPM can join us this morning. Shane will be talking you through the intricacies of R&D, but it's only the latest of a number of webinars we've done with FPM in recent times, including succession planning and recession-proofing your business. Those are all recorded, as this will be, and uploaded onto the CEF YouTube channel. So by all means, share that with colleagues and go back and have another look when you have time. As I say this morning, welcome to Shane. Shane is going to talk you through the latest changes to R&D tax relief. To some of you, this might be a refresh and just making sure you're up to date. Some of you may not have explored R&D before, so by all means, make use of this. I know Shane will be delighted to hear from you. Any questions? If you have any questions during the webinar, what I would suggest is at the bottom of your Zoom screen, you'll see a Q&A function. If you pop your questions in there, I will appear at the end of the presentation and will happily pose those questions on behalf to Shane. So do make use of that ability. Shane, you're very, very welcome this morning. Delighted to have you and look forward to hearing what you have to say.
Thank you very much, Mark. So I'm coming through okay there, yeah? Perfect. Okay, so suppose I will, I'm very pleased to be here. As Mark said, this is one webinar in a series of webinars that FPM are delivering for CEF, and we're very pleased to be able to deliver these webinars. Today I'm going to speak to you about the intricacies and the changes that there are in relation to R&D. I think anybody who's keeping an eye on the news will understand that R&D has been a very hot topic in recent times, and there are constant changes, and we're hoping that we can convey some of the changes and how they're relevant to you. A little bit of background about myself. I am with FPM now almost a year and a half. I started off my career leaving university. I actually worked in a construction firm, a local builder and developer in the Mid-Ulster area. And I worked in construction for about 5.5 years prior to starting off my professional career in one of the big four in Belfast. I was there for 11 years and headed up the mid-tier tax team. And part of my responsibilities was R&D as part of a general tax role. Subsequently leaving Big Four, I joined a local firm in Belfast. And as part of that, myself and two other guys set up an R&D business as a bolt-on to the accountancy practice. I was there for just over 4 years, and after COVID and lockdown, I decided to make a move back home to the Mid-Ulster area. And I subsequently joined FPM at the start of last year to take up a tax role as a tax director with a bit of a focus on R&D as well. So FPM ourselves, we are one of the largest and leading accountancy, audit, tax advisory and insolvency firms in the island of Ireland, both north and south, offices across Belfast, Dublin, Newry, Dungannon and Mollusk. And we're part of the wider AAB Group, which is a 1,000+ strong team across 10 offices in the whole of the UK and Ireland. So today we are going to, slide on here for you, we're going to take a look at R&D. So the landscape of R&D and tax legislation is shifting. It's vital for all businesses to stay abreast of these changes to sustain the competitive advantage that they may have in the construction sector. Today, hopefully we will demystify some of the complexities of the new R&D legislative updates, and we're going to take you through some of the intricacies that there are in the recent reforms. This will include an overview of the new legislation that HMRC has introduced, their new guidance, and what we see in the marketplace as being their new approach to R&D. We'll have a look at some of the opportunities that there may be for each of you, take a look at some of the challenges that you're going to face, and some strategic action that you may be able to take. So first of all, I think it's helpful for most people to take a little bit of an overview of the R&D scheme. It's been around since the early 2000s. I will assume that most of you have come across it in some guise or another, but I'll just give you a little bit of a recap on it. So R&D tax relief supports companies that are working on innovative projects. Work that qualifies for R&D tax relief must be part of a specific project that's seeking to make a scientific or technological advancement. When conveying this to HMRC, you need to explain how the project that you're working on is making an advancement in the specific field. You have to articulate what challenges or scientific uncertainties it had to overcome. You have to demonstrate the work that you undertook in relation to those uncertainties. And you also have to convince HMRC that this work could not have been carried out straight away by a competent professional. The projects that you undertake in research and development may develop a new process, they may develop a new product or service, or they may improve on an existing one. So historically, there would have been two different types of R&D scheme. You would have the SME scheme for small and medium enterprises, and you would have the large scheme, or the RDEC scheme as it was known as. In order to claim under the SME scheme, there are certain criteria that you had to fulfill. So you had to have less than 500 staff, turnover of less than 100 million euros, and a balance sheet value of less than 86 million euros. These are EU limits that we're talking about here, hence why they're in euros. And in looking at those limits, you have to include the relevant portion of any partner or linked enterprises that you have. So that's how you qualify as an SME. For a large or an RDEC scheme, in relation to those limits, you must have over 500 staff and then reach either the 100 million euro turnover or the 86 million euro balance sheet value. So that's the two types of schemes. In relation to costs that qualify, so main element of qualifying costs for most companies are your staff costs and any consumables that are used up in the R&D process. For SME schemes, the qualifying costs also include a relevant portion of some subcontractor costs. This is not present for companies claiming under the RDEC scheme. It's also worth noting that under the RDEC scheme, an SME can fall under the RDEC scheme if they are receiving notified state aid for a particular project as well. RDEC scheme companies cannot claim for subcontractor costs to limited companies, but there may be other qualifying entities that they're able to claim for. So if we look at maybe some of the qualifying periods that might still be open to some of the companies on the call here today. First of all, we look at accounting periods up to the 31st of March 2023. So if we look first of all at the SMEs for that period, as well as the deduction through the P&L for the costs that are identified, as a tax deduction, those companies will receive an additional 130% of an enhanced deduction. During that period, the corporation tax rates were 19%, and this would result in an overall tax benefit of almost 25% for any qualifying costs identified during that period. For loss-making companies within that period, for the losses that they have, they would be able to surrender up to 230% of the costs. So that's the initial 100% going through the P&L and the enhanced deduction of 130%. And they're able to claim that as a repayable tax credit at a rate of 14.5%. This gives an overall benefit for the qualifying costs at 33% to the company. Very beneficial. During that period then, you also have companies claiming under RDEC, and for that period, the taxable credit that HMRC gave companies was at the rate of 13%. As a taxable credit, that suffered corporation tax. So after corporation tax, the net benefit to companies was just over 10.5%, and that was the same for both profit-making and loss-making companies. Then we move into the period from the 1st of April 23, and there were certain changes in the rates applicable for companies. So for SMEs, the enhanced deduction was reduced from 130% to 86%. And at that time as well, the corporation tax rates changed. So it moved from 19 to 25. There's certain limits at which there's changes within that period, but the top rate was at 25%. This meant that companies getting that additional deduction of 86% could receive an overall benefit of 21.5%. For loss-making companies, similar situation to it had been previously, instead of getting the enhanced deduction at 130%, that was at 86% as well, and that 186% then was also surrenderable for a repayable credit, and the rate at which they could surrender that reduced from 14.5% to 10%, leaving the overall net benefit at 18.6%. Again, quite beneficial, but not as good as it used to be. During this period, there was a new concept introduced as an R&D intensive company. And this was in relation to loss-making companies. And that sought to put them in the same position as they had been previously, where they could surrender their losses for a tax credit of 14.5%. So with this being introduced, that increased the benefit to almost 27% for loss-making companies. The criteria for qualifying as an R&D intensive company was that at least 40% of the total qualifying expenditure, that had to be 40% of the overall expenditure within your P&L. So quite a high threshold to meet. But again, it put those startup companies that would be very R&D intensive in no worse a position than they had been previously. If we look at RDEC companies, a profit-making RDEC company, after the 1st of April 23, the taxable credit increased from 13% to 20%, giving an overall net benefit of somewhere between 14.7% 16.2%, depending on what the profit levels of the company were and what corporation tax rate they were paying. Loss-making companies also received a 20% taxable credit, and there was a notional tax deduction at the higher rate of 25% withheld from this, leaving the overall benefit for loss-making companies at 50%. If we look then at some of the changes that have been introduced since 2023, the first one that we have is the additional information form. This came into existence in August 23, and the AIF form, as it's known, must be submitted by all companies alongside their R&D claim and their corporation tax return. Various information needs to be completed within this form. You have to provide certain financial information, technical information about your the projects, as well as some routine information about your company. It's worth noting that if you don't submit the AIF form to HMRC, they will automatically reject your claim. Additionally, if the details on your AIF form don't match the details on the submitted CT600 and corporation tax computation, HMRC will also reject your claim. So if we have a look at what you possibly need to include on the AIF form, as I mentioned, there's technical information that you need to provide in relation to the qualifying projects that you have. The number of projects that you have to provide detail on depends on the overall number of projects that you're claiming for. The criteria set out by HMRC in relation to the projects is that if you have between 1 and 3 projects, you have to provide detailed narrative on all of those projects. If you have between 4 and 10 projects, you must provide detail on at least 3 of those projects, but a sufficient number of projects that cover at least 50% of the costs that you're claiming for. And if you are claiming for more than 10 projects, you must submit details on at least 3, but potentially up to 10 projects if you're claiming for a large number of smaller projects. Next, you need to provide some financial information, and you need to provide a breakdown of the financial information across all the qualifying cost categories, and these must be split up across each of the projects. So you have to clearly define what the costs for each of the projects are. You also must provide details of any qualifying indirect costs that have been incurred in relation to the projects as well. Finally, in relation to the AIF form, you must provide some relevant information about the company itself. So you must provide the company's unique tax reference payer number, and you also have to provide the PAYE reference number, VAT number, and their SIC code from Companies House, as well as details of the person who is the responsible person within the organisation and the details of the agent that has prepared the claim. On the ground, where we're seeing some potential issues in relation to this is in relation to the SIC code that certain companies have within a Companies House. SIC code is something that maybe doesn't get the correct amount of care and consideration that it perhaps should, especially when it's something that HMRC are focusing in on. Whenever claims are submitted to HMRC, the first thing that they're looking at is what the SIC code of the company is. And if it isn't a SIC code that they would naturally associate with a company doing R&D, then they're more likely to raise an inquiry. So it's potentially worth noting what your SIC code is and perhaps amending the SIC code that you have on Companies House to try and raise less red flags with HMRC. In addition to the AIF form, there was also a new form, which was the claim notification form. This was relevant where your company possibly hasn't claimed R&D before, or it hasn't claimed for R&D in the last 3 accounting periods. And if that's the case, then you need to submit a claim notification form before you file. Certain time limits for submitting that form, and you need to submit that form within 6 months of the end of the accounting period for which you're going to claim. You can submit that notification as soon as you start the accounting period that you're going to claim in, but your maximum time limit is 6 months from the end of the accounting period. This potentially is to circumvent historic practices where companies were being approached by R&D companies to make a claim, and they were using the normal 2-year window that they had to amend the corporation tax return. So this is seeking to get away from that type of practice and make sure that only companies who are thinking about R&D live and as part of their day-to-day will be able to make claims for R&D going forward. On that form, there's certain information around the company's unique tax reference payer number, the main contact internally within the company, details of the agent and your agent's reference number, as well as the relevant start dates for each of the accounting periods in which you're going to claim. Next, we move on to certain changes there were around eligible costs that could be claimed going forward. And from 23, certain costs related to cloud computing solutions, data licensing, and pure mathematics are now eligible for relief. As is similar with the other qualifying expenditure, costs associated with these activities must be directly related to resolving the scientific technological uncertainty that the companies are looking at. For example, if you were using a data set or cloud computing service for possibly both qualifying and non-qualifying activities, HMRC will allow you to undertake a reasonable apportionment of those costs. And as I said, these changes apply from the 1st of April 23. So that brings us right up to date. And then we move into the new merge scheme, which has got quite a bit of publicity over the last 12 months. And the new merge scheme for R&D expenditure credit and the enhanced R&D intensive support scheme replaced the old RDEC and SME schemes for accounting periods beginning on or after the 1st of April 24. With these two schemes, the rules for both of them are exactly the same, but the calculation is slightly different, and I'll explain that shortly. These changes, SMEs will see the abolition of the more valuable SME scheme as it had been historically, and it will be replaced with a slightly modified RDEC scheme. This will enable SMEs to claim an above-the-line credit of 20% on all its qualifying R&D expenditure. The changes will also expect to be welcomed by companies historically claiming under the RDEC scheme, as they will see a number of enhancements as a result of the merger. This will include the lifting of some restrictions on subcontractor costs, as well as the use of the more generous SME, PAY, and NIC cap that needs to be taken into consideration. So the changes for the new merged scheme, as I say, take effect from the 1st of April 24. And I'll just outline what impact that will have on profit or loss-making companies. So similar to the old RDEC scheme, going forward, a profitable company will be able to claim a taxable credit of 20%. And as the corporation tax rates range from 19 to 25%, the overall net benefit for a profitable company will be somewhere between 14.7 and 16.2%, depending on what level of profits they have. For loss-making companies, they will receive the taxable or the tax credit of 20% as well. And as a change to how it was historically, where they suffered a notional credit at the 25% rate, that's been reduced to the 19% rate. So this changes the overall benefit to loss-making companies to 16.2%. I did mention that in addition to the new merge scheme, there was also the Enhanced R&D Intensive Support, ERIS. And while it was previously announced that a company would be considered R&D intensive if 40% of its total expenditure was qualifying for R&D, this threshold has been reduced to 30% for accounting periods on or after the 1st of April. So it lowered the bar slightly for that parameter. The ERIS system allows loss-making R&D intensive SMEs to claim the additional enhanced deduction of 86% of their qualifying costs in calculating the trading loss that they have. And it also allows them to surrender the enhanced deduction for a payable credit. That payable credit still sits at 14.5%, and that means that the overall benefit for loss-making R&D intensive SMEs is roughly 27%. Again, very generous. The changes here have sort of merged the sort of trend there has been in years gone by, where the SME relief has been reducing and the RDEC relief has been increasing, to try and bring them to a more unified one-size-fits-all approach for R&D, and that's where we find ourselves. Some of the changes that were introduced as well was the overseas restrictions. This may be relevant to some, this may not, but it's worth making note of as well. So for construction companies, the new rules will restrict the ability to claim R&D relief for expenses related to R&D payments for contractors or externally provided workers for activities that they conduct outside of the UK. The main aim here from HMRC is to try and ensure that the benefits of R&D tax relief primarily support R&D activities undertaken within the UK. There are certain conditions that will mean that overseas expenditure can qualify, but these are quite tricky and worth taking note of if you find yourself in that situation. Another change was in relation to the contracted out R&D. And again, this is quite relevant in the construction sector. The new rules aim to ensure that companies making the decision to undertake the R&D can claim for the relief for that expenditure. This emphasizes the importance, specifically in construction companies, the importance of contractual agreements in determining who is eligible for R&D relief. So that's a broad overview of the R&D scheme and where we find ourselves today. So looking forward, the new regime for R&D, as well as all the new legislative changes that I've taken you through, HMRC have also issued new guidance that aims to help companies claiming R&D tax credits. There's a great significance to the understanding and following these guidelines to ensure that any claims made are going to be successful and approved. With HMRC, the main aim of these guidelines is to enhance the quality of the claims and ensure the companies are undertaking a systematic approach to claiming R&D, whilst it's also aimed at reducing low quality claims. We understand from HMRC's activities recently, they're also trying to limit the number of R&D expenditure claims, and thus this will impact the value and the benefit that companies such as yourselves will get from R&D activities. We can't stress enough the importance of documenting and planning the R&D phases for each of your projects. Documentation should include detailed descriptions of the technological uncertainties and the planned steps that you're taking to resolve those uncertainties. HMRC's guidance states that they expect linear progression in addressing the uncertainties. And we all know that problems, issues, and R&D projects that you'll be undertaking don't necessarily follow a linear progression. And the way things are on the ground doesn't necessarily align with HMRC's approach. This stresses the importance of properly documenting what you're doing and ensuring that that can be articulated to HMRC. We find in the field that there's often the need to address multiple scenarios and working those in parallel when trying to address the uncertainties that a project can bring up. Where you do have several work streams progressed in parallel, working simultaneously, it is always good to document those and have the evidence there to support, so that that can be used to evidence within the project summaries when providing the detail to HMRC. HMRC also focus strongly on the competent professional, and we have evidence of HMRC rejecting claims where they don't believe the competent professional or the person that was held out to be a competent professional was actually a competent professional in that field. Certain criteria that they have that someone must fall within is that the competent professional must be knowledgeable about the relevant field in which they're operating. They must be aware of the current state of knowledge in the field as a whole, and they must have accumulated experience and have a successful track record in that field. There's no stipulation that the competent professional must work for your company. They may work for another company. As a result of these legislative changes and the changes in approach by HMRC, we have seen many changes in the R&D world over the last 12 to 18 months. In recent years, HMRC has significantly intensified the scrutiny on R&D tax credit claims. This was triggered by the well-publicised concerns over system abuse that they had. And in HMRC's 2022 report, they indicated an escalated oversight and an increased number of inquiries that they were seeking to raise due to the concerns that they had. And we can see that in the field now, there is currently about 20% of claims being inquired into. Quite a shocking number of claims that HMRC are currently looking into. This ties up companies' time, and it also ties up their advisors' time. And it's actually a cost to companies as well. The HMRC launched this substantial compliance crackdown in order to weed out non-compliant filings. And they found that in particular, most of these fell within the SME scheme. It's estimated that error or fraud accounted for almost 17% of the funding paid out by HMRC. And we can see that the activities that they're undertaking in terms of the guidance and the legislative changes are seeking to reduce the number of fraudulent or claims made with an error in them. As I mentioned, the inquiry rate currently sits at around 20%. This is a huge leap from what used to be an historical 1% rate. So, If we look at incorporating, I suppose, in the specific context of the construction industry, the guidance, the changes in relation to R&D relief that became effective from 1st of April 24 can highlight several key aspects that construction companies would need to consider when claiming R&D relief for projects that involve specifically contractor payments and externally provided workers, as these are the two of the main areas that HMRC are focusing on, especially when these scenarios and the projects that you're undertaking involve overseas. So the overseas restrictions for construction companies, the new rules will restrict the ability to claim for R&D for expenses related to contractor payments or externally provided workers for activities conducted outside the UK. As I mentioned earlier, this aims to ensure that the benefit of R&D primarily supports domestic activities, unless there's certain specific conditions that can justify the overseas R&D. And I'll give an example of that shortly. For contractor payments and externally provided workers, construction projects, as you know, often involve complex subcontracting arrangements for specialized work. Under the new rules, to qualify for R&D relief, payments to contractors and EPWs must be for activities conducted within the UK. For example, a construction company that needs to engage a contractor for testing materials in extreme weather conditions that aren't available in the UK and are only available outside of the UK, this could qualify as an exception, provided certain conditions are met. As mentioned earlier, another one of the main things is around evidence and documentation that companies are going to have to provide. Construction companies will have to maintain robust documentation to support their claims, especially where they seek to avail of some of the exceptions for overseas expenditure. This could include providing details on the contracts, specifying the location and the nature of the R&D activities that are going to be undertaken, copy invoices and records proving the necessity for conducting certain activities abroad. At this point, I suppose it's worth noting that merely for the fact that it's cheaper to undertake the R&D outside of the UK doesn't fall within one of the exceptions. So there has to be an alternative reason as to why the R&D can't be taking place within the UK. For contracted out R&D in construction, the new rules provide clarity on who can claim R&D relief in scenarios where there are multiple parties involved in the subcontracting scenario within the construction industry. This was one of the main concerns raised during the consultation period, and HMRC have sought to address that. As an example, a construction company who contracts out a portion of the work that requires an innovative solution to a technical problem, the guidance that HMRC have issued helps to clear up the issues and helps to determine whether the contractor or the company itself can claim the relief based on who actually initiated the R&D and the nature of the contractual agreements between the companies. An example here might be if a construction company commissions an engineering firm to design an innovative facade for a building that meets the new energy efficiency standards. The design process involved R&D to overcome technical uncertainties. If the construction company itself specifies that the R&D is a requirement and works closely with the subcontractor, then the company may claim the R&D. However, if it's the engineering firm themselves that independently identifies that the R&D is needed and undertakes it themselves, then it's the engineering firm who may be eligible to claim relief, providing it meets certain criteria. Another category that there is where there are some ineligible companies within the subcontracting chain. So there's guidance issued here where the ineligible company or the ineligible person may be a government department or an overseas entity that can't claim the relief for UK R&D. In these scenarios, it may be possible for contractors within the UK, such as construction companies or their subbies, to claim for the R&D relief. It's worth noting that for construction companies navigating the new R&D relief rules, It requires careful consideration for the project structures, how the subcontracting arrangements are made, and the location of all of the R&D activities. The guidance that HMRC have issued does give detailed examples, and it places emphasis on the evidence and the documentation that needs to be provided for construction companies to assess their eligibility under the revised legislation. This will also help them to make sure that they maximise the claim while adhering to the new requirements. So if we look on to see what the potential opportunities for construction companies in the UK might be, it's clear from the way things have been going in relation to R&D that there's enhanced scope for innovation within the construction sector. The inclusion of costs related to data analytics and cloud computing in the new R&D scheme is very significant for the construction industry. These technologies are at the forefront of innovation in construction, and they offer companies ways to improve project planning, execution, and management through enhanced data analysis and more efficient resource allocation. By incentivizing companies to use such technologies, schemes can accelerate the adoption of digital tools to facilitate predictive analysis, machine learning for design optimization, and cloud-based collaborative platforms. This shift will not only support operational efficiency, but it should drive sustainability by enabling smarter resources and waste reduction. It's very important here that firms can exploit all digital tools and big data. They want to make sure that they are maximizing the benefit that they are able to claim under the new cost categories, trying to focus their R&D within the UK so that they don't fall foul of any R&D that's undertaken outside of the UK. And for any company that still qualifies as SME and has open periods that qualify for the enhanced relief under SME, it is an opportunity for companies to maximize the value that they can get for claims falling within those periods. If we look then at the challenges that are facing, one of the main challenges will be the impact of the administrative changes. The administrative changes include the requirement for digital submissions, pre-notification for first-time claims, with an aim to streamline the process and reduce the fraudulent claims as HMRC see it. These measures raise the administrative burden for all companies, but in particular, it will have a bigger impact on small to medium enterprises. This can be quite daunting, as they may not have the bandwidth to cope with it, or they may not have the familiarity to deal with digital submissions. Impact of this could be that it could lead to valid R&D activities going unclaimed, and that will reduce the financial support that is available to construction companies for the innovation that they're undertaking within the sector. Furthermore, I think companies will have fear of an increased level of scrutiny through HMRC inquiries, especially when we understand that HMRC have employed over an additional 100 inspectors to deal with the increased level of inquiries that we are seeing on the ground. No one wants HMRC poking around their affairs, and this fact might deter some companies from making valid claims where they would be completely legitimate to make a claim. The prospect of undergoing an inquiry can be very intimidating. It can require significant time and effort and resources from the companies, and this could lead to them not making claims. Again, I don't think that's the situation any of us would want to find ourselves in. The construction industry also faces unique challenges in identifying and substantiating the R&D activities that it does take, and this is due to the project nature of the work that it undertakes, the integration of the innovation that it is doing into its daily practices. We all know in the construction industry, R&D often involves developing bespoke solutions for project-specific challenges, and these can be trialing new materials, designing custom tools, or optimizing construction processes for efficiency and sustainability. And sometimes it is quite difficult for firms to understand any of the work that they're undertaking in these fields can actually be R&D. I think we often find that the thought process is, this is just part of our daily work and this is just how we do things. It can't be R&D, but that can be often overlooked, and it actually does qualify for R&D. The fact that this is not recognized can lead to companies underclaiming for the R&D tax credits that are available, and hopefully the revised regime's emphasis on digital innovation will help to clarify the scope of what is eligible R&D activities, but it will also necessitate a broader understanding from within the industry as to what actually constitutes R&D. So companies will have to be more adept at identifying and documenting their innovation across their projects from very early stages, be that the design stage right through to construction and evaluation. Excuse me. So the main changes here, the main challenges will be around the AIF form and the claim notification with the increased admin burden, and also the increased scrutiny by HMRC that can lead to underclaiming. And the overseas restriction will also have a potential to reduce the claims. Move on. So what can each of you do as a strategic response to these changes? So I suppose to maximize the benefit that of R&D tax credit scheme, construction companies should consider strategic adaptations. And this can include investing in internal process to help identify and document and also substantiate any R&D activities that they're undertaking, as well as engaging with specialists with the expertise in R&D tax credits and within their specific place within the construction industry to help them with these claims. Specialists can always provide invaluable assistance in navigating the complexities of the tax credit scheme, and this comes from sort of their understanding of the eligible criteria when preparing and submitting claims. I think it's worth noting that additionally, construction companies should foster a culture for innovation, and I think that's clear from what we see for companies in Northern Ireland. They always do foster that culture of innovation, and they should also encourage employees to help identify and pursue R&D opportunities. This will not only be done through leveraging new technologies like data analytics and cloud computing, but also recognizing the potential for innovation in everyday problem solving that happens day in, day out within the office and on site. I suppose in conclusion, then, while the revised R&D tax credit regime does present certain challenges for the construction industry, particularly in terms of the administrative complexity and the need for careful documentation, it also offers substantial opportunities for companies to maximize the benefit that they can gain from the R&D scheme. And they can do this by being willing to invest in innovation and adapt to the changing landscape. By embracing the technological advances, refining their processes, and seeking external guidance, construction firms can navigate these changes effectively and continue to drive forward within the industry, as we can see they do in Northern Ireland. So I suppose the main theme here is to get ahead of the game, think about your R&D early on in the process, document your activities from the early stages so that you can provide backup for your R&D, and embrace the technological advancements in all sectors to benefit your and maximize your relief from R&D. So a final note would be that within FPM and the wider AAB team, we are a team of about 30 plus members. We're currently dealing with hundreds of claims made each year for our clients. And what we do is we help our companies navigate the complexities of the R&D tax credit claims, not just with our understanding of the guidelines, but also the expertise in articulating the technical and financial aspects of the R&D projects. At FPM, the innovations team that we have are composed of specialists in various areas, such as software technology, engineering, and finance as well. And we would apply our in-depth knowledge and experience to prepare robust R&D and patent box claims for our clients. The proactive approach that we take to maximizing the benefits ensures compliance and equips companies with the ability to defend their claims should HMRC inquire or investigate into them. HMRC's increased scrutiny and the likelihood of inquiries is likely to continue in the foreseeable future. And the importance of a well-substantiated, compliant R&D claim can't be overstated. By understanding the triggers that HMRC have for raising inquiries and adopting a thorough evidence-based approach to make your claim, we can help navigate the tax credit landscape more confidently, and we can leverage the expertise that our team have. As part of the presentation for anyone that has attended today, as well as the slides being available, we have also developed a free download guide. The free download guide will be available for everyone as well. The way to get today's content is to send me an email, and I leave my email address on screen here. And anyone who wants a copy of the slides and our free download guide is more than welcome to contact me. I'd be more than happy to share that with you. Mark, I think that brings to a close everything that I had to say. I am happy to take any questions that have been posed during the meeting.
Shane, that's fantastic detailed run through there and a complex area. But would I invite anyone who has any questions? This is the time. Drop those questions into the Q&A box. Just a couple of observations I had. The whole area of working with your supply chain, your subcontractors, in terms of making them, I suppose that's just a bit of tax planning up front, Shane. Everybody being aware of their respective role in that tax claim that you might make.
Yeah, I think it is very important to understand and set out from the start who is going to be responsible for what. And that's one issue that HMRC have identified, the potential risk area, and something that they have sought to clarify. So their main focus now is on who initiates the R&D. So if it is you as a construction company who has asked someone to undertake this R&D for you, then the claim will sit with you, broadly speaking. If, however, you have engaged someone to produce something for you and off their own bat, they undertake the R&D themselves, then that will naturally sit with them. But again, HMRC will go down the route of reviewing and inspecting any contracts to see if the claim has been made in the correct place.
Okay, good to get that clarity up front. Looking at the scope for digital and cloud-based technologies, then fully understanding that would include, field software, planning software, BIM models, and so on. Does it extend to financial software in the cloud? Is something routine is doing? Is there an argument or scope for the inclusion of those?
So again, I think they have clearly defined what it is they're hoping to include, but it is more around including that the data sets that might be available and some large software. So if you have software that is being used directly to develop designs and that's been used for your R&D projects, you can definitely claim for a relevant portion of that. The software is sometimes an overlooked area of claims, and we have seen in the past evidence of where this can add greatly, because some companies can be very software intensive, specifically around engineering, manufacturing, and construction as well.
No, absolutely. I think as a sector, we're probably not knowing when we're doing something innovative as well. We tend to just get on the day job, and it's important to flag up a lot of what we do is eligible and within scope. Just another thought for me, just in terms of record keeping, any practical hints or suggestions as to how we might make sure we look at things in the daily business?
So I suppose that's easy for some firms who are currently doing R&D, Mark. I suppose they'll have been in a process where they've undergone an exercise with their accountant or their R&D provider to provide information for them to substantiate the projects that they're undertaking. And with that knowledge, they can then think about, and something that we would encourage all our clients to do is to try and think about that process early on. If you think of a normal scenario where you have, let's say, a December year end and you finish your year and your accounts don't need to be prepared and filed until the September, if you're not thinking about it until then, well, then 9 months have gone and it's really hard to remember all the detail. So if you're in the process and the habit of making claims, then it's far easier to understand what sort of level and quantity of detail you need to provide at that point, and then be mindful of gathering that data as you go through the year.
Listen, terrific. Just a question that's popped up there. What periods can R&D be claimed for at the moment? In other words, how far back can we go?
So we make an assumption here that someone has been claiming R&D. And if we put ourselves at today's date, so we're sitting at the 26th of April today, with a fair wind and an exceptionally hard piece of work between now and the end of April, the period ended 30th of April 22 would still be available to make a claim for. Now, again, very tight deadline, and that's assuming that someone has made claims before. Again, that doesn't fall within the new rules for accounting period starting on or after the 1st of April 24. So the new claim notification period at 6 months within the end of the accounting period doesn't take place. So there's no restrictions on making a claim for accounting periods from the 30th of April 2022. So your normal 2-year window for making an amendment to your corporation tax return would still be applicable.
Okay, thanks for that. That is all the questions we have at the minute, Shane. I know your contact details are on screen. We will also follow up in the next few hours with a link to YouTube as we upload this. If anybody wants to share it with colleagues or watch it back, we'll add on Shane's contact details there, and we'll be happy to take any questions from you then. So Shane, just remains for me to thank you so much for your time. Thank FPM as usual for their support. It is fantastic, the level of detail that comes to the industry from your business. We really do appreciate you taking the time out today to talk to members. I hope you all find it useful. As I say, thank you for joining us, and all the details will be shared with you by email after this event. Thank you very much.
Many thanks, Mark, and thanks for the opportunity for FPM to present to your members. It's always a pleasure to present, and I hope that we can help some of them going forward.
Fantastic. Thanks very much. All the best, folks.
Okay, thank you. Bye.